All right. Hey guys, Brad here at Elliott Wave Made Simple. And today we're going to take a look at the Nasdaq. I'm going to give you levels, but this is also a hybrid video. Going to do some education about how to measure for corrections. All right, let's dive into the analysis of the Nasdaq. All right, so I'm not going to make this video too terribly long, but I want to teach you guys how we measure for corrective waves and what that can tell us in terms of structure. So, a little background on this NASDAQ chart. I'm going to just catch you up. After this decline down to here and the move up, I'm looking for a C wave. The whole thing is corrective. As you know, if you've been following me at all and watch the other educational videos, you'll know an A, B, C is a corrective wave. What that means is it's possible that this thing already topped out way over here. We got an impulse down, and then now we are bouncing in a giant three-wave correction. And as you can see, after the last couple of sessions, we've got a rejection happening right from this box. How is that possible? If you're in the club, the professor trades, maybe you've noticed my NASDAQ chart. You've seen these boxes on my chart. And how often have you seen price come up into one of my boxes here and then get rejected? Or if the box is on the bottom, you often see that act as support. So let's take you through some educational ideas for Elliott Wave and how we measure corrections. So I'm going to keep this video very simple. I'm really looking to measure a wave 2 correction and a wave 4 correction. And I'm also going to talk a little bit about how do we know when to measure for a wave 2, or how do we know when to measure for a wave 4. So in this example, we're on the 1-hour chart of the NASDAQ. I'm going to drop it down to a 21-minute chart just so we can see a little more detail of the structure. All right, so here's that B wave, which we were looking for as a potential low. And one way to really confirm that is if you see a move off the low that completes in 5 waves. In this case, it is behaving as a diagonal. That's a topic for another video. But the point is, once we got this swing high and came down and got a swing low, before that even completed, I'm already measuring for it. What I mean by this is if you're a day trade scalper, I am always measuring a swing low to the swing high to see where did price retrace to. Now, I'm always looking for the 618. So if you see almost any of these little peaks right here, look at that. Price came down. Well, on this peak right here, I got to turn the magnet off because the magnet is grabbing it. But just from this first little peak right there, price is right between the 50% fib and the 618. By the way, these are templates that I've saved for measuring certain things over and over again. For wave 2, I really like the 50% through the 764. So you might be thinking, well, maybe this is the 1-2. Well, it could be. That could be a 1, 2, 3, 4, 5. Now we know that in hindsight, but the point is this could be the 1, 2 of a diagonal. And then the reason I say it's a diagonal, because if this is the third and this is the fourth, this wave 4 got into the price territory of this wave 1, which, as you know, is a rule. Now look, you can go back and look at the first 2 videos in this series, and they're going to help you understand some of these rules. There's very few hard and fast rules when it comes to Elliott wave. There are countless guidelines, but one of the hard and fast rules is in a standard impulse, wave 4 may not encroach upon the wave territory of wave 1. So if this is indeed a diagonal for wave 1, the reason I can call it that is first of all, it's making net advances. Wave 4 did retrace well into the price territory of wave 1, but it did not make a new low. So as long as price continues advancing and does not make a new low below the wave territory of wave 2 and price keeps advancing, we want to see what looks like 5 waves. Now, the diagonal is more difficult to track, it's more difficult to discern, but that's what this looks like. 1, 2, 3, 4, 5. Now, another thing about a diagonal that I know, an Elliott wave diagonal, is that typically it does tend to respect something of a trend line. So you can see how the top part of that did respect something of a trend line. Okay. And then this is really the shape that you want to see of a diagonal. It's tracking within this parallel channel. So, yes, when this is unfolding, that's exactly what I was thinking. And then when it finally broke and dropped all the way down to here, breaking all of these higher lows, okay, and even got right at the price territory of wave 2. But look, we're not necessarily concerned with that. What we want to do is now measure this swing high and see how far this retrace came. And when we're looking for a wave 2, what we really like to see is for that price retracement to come to at least a 618 or somewhere in the general region of that. This high, I'm going to turn off the magnet once I get the number. By the way, this is just a little technical tip. I use the magnet because Elliott wave does count every penny, especially if you're going to get really involved in Elliott wave. You want to get in the habit of using the magnet. Okay, so in this case, what I do is I turn the magnet off once I have got the tool in place. So I know this swing high is 19,159. So the reason I turn the magnet off is I want to drag this over 19,159, and I'm going to go adjust it so that it is exactly on 191.59. Now I can see where this price wave retraced in regards to these fib levels. So as you can see, incredible. That price wave came right down to the 618, and look at the reaction that it had off it. So this is the first clue that what you have here is 5 up and 1 down. This is a 1-2. So then if you are down here and you see it catch the 618 and you see the reaction, then you're thinking, oh, wow, this could be a wave 3. And a wave 3 is the longest, most powerful wave in the Elliott wave method. So it is always worth, not always, but it is worth trading when you see a 618. I mean, honestly, it's anywhere between the 618 wave 2 can come down deeper and get into here, but this is an ideal looking wave 2. I mean, you can just see how I measured it. I want you to practice on your own Nasdaq chart. Go back to Sunday, and Sunday, September 8th. Put your tool at the bottom of that, your retrace tool at the bottom of that move, and then put it at this swing high, which is on Wednesday at 9 a.m. And watch for yourself to see how price came down and hit a Fibonacci level right on the nose. I mean, usually it's just a zone you're looking for. It still would have been considered a wave 2 had it terminated at the 50%, or maybe had extended and come all the way down here to the 764. It still would have been considered a wave 2. Look at the reaction. So now what we're concerned with is where might wave 3 top out at, and how do we know? Well, you don't. That's the honest truth. You don't know because there are no certainties in trading. But what we want to do is grab our fib projection tool now. Now, if I'm already in over your head, if I'm talking above where your skill level is, go back and watch those first 2 videos. But if you're in the Professor Trades Club, you probably already know what I'm talking about. So I'm grabbing the fib projection tool and I'm putting the first click at the bottom, the swing low. I'm putting the second click at the swing high, what we believe is wave 1 at the top of this 5 wave structure. Then we bring the tool down to that swing low, which is 18,779. Again, I got to turn the magnet off. So, because what I'm trying to do, once I get this right on that swing low, I'm looking over to, having a hard time getting it to stick right on there. I'm looking over here, 18,779.25. 18, 779, 25. I'm dragging that over because what I want to do is now see where my projection fibs, where do they actually, where do the price waves strike? So I've got uh, templates saved in here. And we know, or maybe you don't, but the typical target for wave 3 is the 1618. And I'm going to move these labels over to the left just so you can see them better. And wouldn't you know, now you might originally think, all right, this is coming up. It's hitting the potentially the 1618, and it's getting rejected. Okay. It got rejected there. So let's consider that a wave 3. It's in the wheelhouse of where you would expect a wave 3 to start seeing some rejection. Now, what we're going to do is we're going to measure for a wave 4. Now, maybe you already know this, maybe you don't. I'm getting ready to teach you. I'm going to go back and grab the fib retracement tool. Now, for a wave 4, I'm sorry, my phone's ringing. I'm not going to let that stop me. If you're looking for a wave 4, what you want to measure is very particular for a wave 4. Unlike the other measurements where we're measuring the swing low, for wave 4, we want to start the fib measuring from the bottom of wave 2. Okay. We had 5 up for wave 1. We got a retrace right down to 618. We're calling that a wave 2. So we want to measure the bottom of wave 2 as a first click, and then the top of what we're thinking is going to be wave 3. And I'm going to turn the magnet off as usual. 19,807.25. 19,807. And I'm dragging this over because I want to see where the measurement hits this fib area right there. So now I'm going to go to my templates, which I've already saved for wave 4. It's already loaded because I use these. I'm doing these measurements all day long, all the time. Okay, so now you can see this, where this wave came back down, struck, just dipped below the 236. Well, a standard target for wave 4 is anywhere from the 236 down to the 50%. There are exceptions to these rules, but what I'm pointing out is that this did terminate and get rejected at the 1618, which is the first clue that might be a wave 3 topping. And this retrace came down, caught support inside of the blue box. In this case, it just is a shallow wave 4. It dipped below the 236 fib. Let me make these brighter. Now, you should already know what these fibs are. Go back and watch the other videos. Look for my educational content. But this is wave 4, which tells us now that we can be looking for a wave 5. So let's go ahead and label these. Now, we have the benefit of already looking at the price wave, but I'm doing this during the week inside of the Professor Trades Club, and I'm always looking for Elliott Wave to give me clues about where this thing might be headed. Where did it top? Where might it top? What are we looking for? That's half the battle, is knowing what are you looking for? How do you know what to measure for? It takes time to learn this Elliott Wave business. Okay. It's complex. It's worth the effort, which is why I'm taking the time to make these videos for you guys. So what you have here is a 1, 2, 3, 4 potentially. So now, and by the way, as soon as I put this measurement in on here, I'm looking for a reaction. Is it going to bounce and come back down into this zone? Well, you can see it kind of bounced along here, kind of made a higher high, made a lower low over here. The point is, it, meaning price, held this blue zone, and it did not make a lower low below here. Yes, it dipped back down, but it did not make a lower low. So now I'm going to show you something that I've never showed you before. I'm going to do a video just on this, but it's called ratios, finding ratios. So I'm not going to go too in depth, but I'm just going to explain to you what these green boxes are on not all my charts, but whenever it's appropriate, I put these boxes on my charts if I think I'm looking for an impulse. And you can always tell when I'm using a ratio box because you're going to see 1-3 versus 5. Let me zoom in. because I know some of you guys are on phones and small screens. So when I'm putting a ratio box on a chart, it's very often going to say 1 through 3 versus 5. This is just a ratio box. It's an Elliott wave thing that gives you an idea of where wave 5 might terminate based on where wave 4 bottomed. Now, okay, let me repeat that. This ratio box gives you an idea of where wave 5 might terminate based on where wave 4 terminates. Okay, sounds kind of crazy. Like, what? Okay, and it doesn't always work, but it is a parameter worth observing. And if you don't know how to make your own ratio box like I've done, at least you know what you're looking at when I put it on a chart. And I want you to know how it is created. It's very simple. All we do is take the fib projection tool. We put the first click at the very swing low of the original move. Okay. This is basically the origins of that initial 5-wave move up for wave 1. You put the first click there. The second click, actually, if I highlight it, you can see where I've moved them over, but the top of wave 3 is where the second click goes. And you only get 3 clicks with the fib retracement tool. And the third click goes at the bottom of where you think is wave 4. And then you have to use a template like I've done, but I'm giving it to you. For this ratio, you are only using 2 fibs, the 618 and the 764. And then you're saving it. If you're me, I save all these templates. This is called 3 versus 5 ratio. And the only 2 fibs are the 618 and the 764. And then once you make that third click at the bottom of wave 4, it automatically is going to populate this ratio box. Now, I've moved over the points where I'm clicking to create the measurements, right? They originally here. I clicked at the top of wave 3 with the second click. I've clicked the bottom of wave 4 with the third click. But then I drag them over as price comes up. And actually, I usually drag it over even before price comes up. And I do use some timing fibs, which is actually what this is. This vertical lines are timing fibs. That's a whole nother video. But the point is, I was speculating that wave 5, if that's what it is, should terminate in this box somewhere before it gets to this fib timing level. So I put the box there in advance. And wouldn't you know, price came up very possibly in a 1, 2, 3, depending on how you measure it. This could be the 4 or this could be the 4, and then wave 5 to finish off this entire structure. Now, I'm just putting the labels there now so you can see that price. Now, it doesn't always do this. A great majority of the time, over 50% of the time, price will at least interact with this box, which in and of itself makes it worth putting on your chart as a target. I'm not saying it's going to go there. Nobody knows what's going to happen in price in the future. I'm not even really making predictions, just making parameters to follow. That's what I'm making. So guess what? Had a reaction right at the maximum level for that parameter. Holy cow. And then I won't bore you with all the minutia, but I also am always measuring on the lower time frames, the internals. But in this example, I didn't really need to even go below a 1-hour chart. And 1-hour chart is probably my favorite Elliott wave time frame. For the degree, it's more reliable. We call them degrees in Elliott wave. So to finish off this explanation of how did I end up with a box up here that price came up into and got rejected so handsomely. Okay, because it got a 1, 2, a 3, a 4. Whenever you see a gray box, I'm almost always tracking it a wave 2 or some other larger pullback zone is in gray. Whenever I'm using the color blue, it is always going to be a wave 4 that I'm measuring for. Whenever you see this color green, it's almost always going to be a ratio box that I'm measuring for, because I want you to understand how to read my charts. I almost use for the primary trend that I'm counting. That's LA wave terminology for putting the labels on a wave structure. We call that the count. I almost always use the primary count that I'm showing is in white. And I usually use white fibs for the primary fib levels that I'm tracking. So you just got a 1, 2, 3, 4, 5. Now, the termination point did create a very strong reaction and it continues. So it is possible that the Nasdaq has topped. Now you can't, I'm not saying that just because of this view right here, you have to zoom out, but I'm not getting all into that for this video. But if you look at a daily chart and count it and measure things, look, I'm not saying that this is the top, but I am saying it is possible that that is the top. And one of the ways, now this will be the last thing I'm going to show you, is, as you know, if you're looking for an impulsive 5-wave structure, you already know what we're looking for. And if that is going to be the case, 2331, I'm just going to rough it. I'm not going to use a magnet and be as exacting as I usually am. And I'm going to use my standard Fibonacci pinball measurement. Now, this is pretty crazy because if the Nasdaq is really done, it is possible for this thing to extend even further. And actually, I don't want to give you such a dramatic measurement. I want to give you slightly more micro measurement so you can really see on the internal structure what's going on here. Look at this. I just got finished telling you that the 1618 is a typical target for a wave 3. And let's go ahead and measure. This will be the last thing I do. Let me label these though, and then we'll see. I didn't measure this yet, but I have been trading it to the short side today. So this could be something like this with one more shove down. But let's measure this wave 4. So this totally measures well as a wave 3 because it just wicked down to the 1618. And then look at this beautiful bounce that we got. And it definitely bounced in an overlapping manner, which is corrective. So that's the first clue that this is the wave 4. I'm saving you time, but normally I would drop down to the lower time frames and look at the internal structure. But I just taught you how to do wave 4, so let's do it. One click at the top of wave 2. Now we're measuring for a wave 4 upside down, right? Because this is a bearish wave 4. I just showed you over to the left how to measure for a bullish wave 4. So we come down and we put the fib tool at the bottom of what we think might be swing low. Okay. And in this case, price bounced and got right up between the 382 and the 50% fib. Nothing wrong with that. That is an acceptable. And I'm moving this over because I really want you to focus on where that price wave, this price wave is hitting inside of this box. That's why I move them over. I always move the points over because I only want to draw your attention to the wave structure that is relevant to whatever box or whatever zone I'm presenting. So as a wave 4, and maybe you know this, maybe you don't, wave 4 may not encroach upon the wave territory of wave 1. Bam. Okay. So if you're in a court of law presenting a case arguing, is this a wave 4, Your Honor? Well, yeah, I think so. But if that's the case, yeah, can it come back up and rattle around in here? Yeah, as long as it stays below this level, it has a chance of completing a 5-wave structure to the downside, which is very significant because of where this is in the overall structure. If this is really a C wave up and it's done, sorry, I'm trying to, got to remember to turn the magnet off. So if that's really done, what I would expect to see at a top like this is a 5-wave move. Well, guess what? Right now it's only 3. So I can't be crazy like, yay, refinance the house and go short Nasdaq. Well, I would never do that, but I'm just saying this is only 3 down. So if, as long as we don't make a new low here, it's possible that this is a 3-wave correction to the downside and we're just going to go up and make another high because there is a larger potential, a larger degree way up here. That is a possibility, but I'm not talking about that right now. I'm looking at what is in front of me, my face at this exact moment. So if this comes down now and gives a new low, and I kind of like the idea of this coming down and getting into the price territory of the wave 4 over to the left. So this wave 5 can come lower. And you know what? Let's go ahead and do the ratio that I just taught you how to do. Let's go ahead and do one. So the ratio is we grab the fib retracement tool, projection tool, put first click at the swing high. Second click is at the bottom of what we think might be wave 3. And the third and final click is at the top of what we think might be wave 4. That comes in at 2081. So I'm going to move it over 2081. I'm not going to get crazy with the magnet on this just for the purposes of this video. I'm going to go to my template and select ratio. Bam. Look at that. That ratio box, as of this moment, with this being the bottom of wave 3 and that being the top of wave 4, projects. It doesn't mean it has to go there. It's just a clue. It's a parameter. That's all. That's all it is. But it's a good parameter, because if you get good at identifying enough parameters and then you start seeing confluence among your parameters, now you're going to start seeing consistency in your trading. You're going to watch your emotions go down. Okay. So again, I'm not making a prediction, but I'm showing you how I'm making these Elliott wave charts. So we have a potential another 5-wave move to the downside. So I want to see this complete, because if it does, what's going to happen next? You're going to get a 3-wave bounce that's going to get contained. We're going to measure for that. And then you're going to have what it could be a short opportunity of your lifetime, because if that's going to move down in a larger degree, wave 3, you're going to have some insanely bearish days. I mean, what you're looking at right here is the heart of a wave 3. That's what we had. That's what we had today in Nasdaq. Okay, so there you go. Rewind the video, pause it, take screenshots. I want you to take the templates. Whenever you see me, you can pause the video. When you're taking, like, for example, this ratio measurement, when you see me making it, you see me open this tool, this is your cheat sheet. Take a screenshot, pause the video, take a screenshot. These are the fibs for the ratio. It's simple. There's only 2 of them. And you know how to do it because I just showed you. Same for the wave 4. Now, wave 4s are variable, but I like my template for the wave 4. You can see it. It's right there. But I don't only use a template. I know that a 50% fib is reasonable for wave 4. You could make this your template for the wave 4. Mine just happens to be 236 to 382. But in this example, it came up. It didn't come anywhere near the bottom of wave 1. And it got held in a fib zone, which is acceptable for wave 4. And it moved in an overlapping Gorpy manner, which is what you want to see in a corrective wave. Anyway, look, you just watch me show you how to measure an Elliott wave. Let's see if this follows through. I'm also giving you analysis at the same time. But my heart's desire is to teach. That's my passion. That's what I am. I'm actually a teacher. I'm a music teacher by trade. 30 years of teaching music. Now I'm teaching Elliott wave. Still teach music a little bit, but my passion is now trading an Elliott wave. So there you go. If you like the video, give me a thumbs up. That encourages me to keep doing this. If you like what you're seeing and you're capturing value from this, be sure to subscribe. Hit the notification bell too, so you'll know when I post a video. Last thing, I love you guys. Buy me a coffee. That's the way we keep this energetically going. You're giving me a little energy, a coffee. You can buy me a coffee by clicking the coffee link in the description. If you don't, that's fine too. Just give me a thumbs up. Love you guys. Keep watching, keep subscribing, keep trading. And I hope to see you in the room. The Professor Trades. God bless you. Take care. See you on the next one. Bye-bye.